Good morning to everyone. USDJPY, yesterday punched through 157, heading towards 158. And maybe we are currently in a critical zone, given that we are we're above 75 RSI, heading towards 80. So let me show you what's driving this move and exactly where we're headed next, or we could be headed. So three major catalysts converged yesterday to fuel this rally. First, we've had the FOMC minutes that they didn't really show much, to be honest. So markets still kind of interpret this as no change to the newest rhetoric of not proceeding with rate cuts in December, and that's keeping the dollar, of course, elevated. We had also the Nvidia, which crashed earnings 62% year on year to $57 billion. So that has kind of brought risk appetite back into markets and pushed USD higher. And then the most important set of catalysts for this particular move, sell Japan trade, where Japan announced a massive stimulus package worth over 112 billion. So that's raising a serious fiscal health concern in Japan. Japanese bonds are getting hammered. 30-year yields hit all-time highs. And today, of course, we are getting the US CPI data, which I think is what we have to pay attention to in order to see whether this can continue. So if you do recall, a few weeks back, we've done a video on USDJPY. We talked about this structure as a triangle, and we were looking for a retest and potential continuation towards 155. I think obviously this is already done. It was done this week, perhaps last week. Yeah, last week also. Why we're looking at this level particularly is because if we look at this move to the upside, this is of course the A, the B, the C, the D, and the E. So we're looking at starting, let's say for example here, and putting that down at the completion level, and coming to kind of projecting where this could get us. We've had a break of the 100%. That's why we were calling the 155 a while ago. And now we're looking towards 138, at around 158.70, 159. Consequently, we are looking also at the previous high formed on January 10, right, 2025. So this is a cluster, and this is a very important level. And I think this creates a magnet zone over here, right? So one way or another, it looks like that we might be heading there, even if we do see a short-term pullback. For me, and if the current situation in the US and in Japan, mainly I would say in Japan, isn't going to change, any pullbacks are buy the dip opportunity. We could head towards 160 as well. Might as well just head to the previous high in 2024, close to 162. But of course, this would be probably the final upside. Okay, why? Well, because at some point there's probably going to be some sort of intervention. So if I were to trade this, I would be looking at a not really a late entry for this, because our stop loss can be below the 100%, and our take profit can be around 62, previous high. So this still gives you a 2.2 risk to reward ratio. Obviously, we are looking for, trailing this trade. And if we just were to go a little bit closer here, currently, let me just pull that a little bit further in. There we go. Currently, what we do see, right, we see prices start moving lower down. So 157 perhaps would be a good entry for us. And our stop, I would probably prefer to just bring it below that previous low over here, right? Below that low, just in case, because it could be a last, like maybe a bigger sort of pullback. Still, it gives us a very positive risk-reward ratio. So I would be looking at around 157, 157.20 for an entry. Stop loss would be around 154.70. Okay. The first target would be the 138.2, 158.70. Second target will be, well, I would say the 160. I will probably just go and ignore 161.8 since it's just a tiny bit higher above the handle. So, and then I would be looking at the last one at 162. How you want to trade this is up to you. I would be looking to take out around 50% of the trade here and another 50% of the remaining at 160 and let the rest run at the previous high at 162. With, of course, a stop at break even when we reach 138.2. So the moment the trade goes to, if it goes to 158.72, we're going to move our stop at break even, which means at the entry level at 157.20. Risk to reward on this sub-top is still great. Okay, and as I said before, obviously what could go wrong is a break of, I would probably say 155. Okay, and intervention rhetoric, because the reality is just Japanese officials are getting nervous around these levels, and any verbal intervention could spark short-term volatility. Weather is still leaning hawkish to bring down inflation, but the next speech or announcement might be a bit more important. So bottom line here, guys, is that the USDJPY has broken out, fundamentals are aligned, and the technical path is clear. We are looking for 158.70, then 160, then potentially 162. Trade the structure, manage your risk, and let the trend work for you.